Welcome to TradeTheMBI.com. This is Jones Reports for the 16th. Well, had a great birthday. Went did some go-kart racing. Was out there having a good time, getting crazy, but the market not doing a whole lot of anything here. We're in a weak spot here. We got magenta under yellow, a little bit of rising MBI white. So those are all weak signs. Pretty straightforward for us from a trade standpoint. Above the ABM yellow, 61.33, you're looking for the upside move. I see here with the shakeout gold rising, probably not a whole lot of downside threat at this particular stage. You still have the momentum of seasonality, but there's some issues. You've got the potential of the Syria Middle East situation imploding. The war with Russia, Ukraine is still escalating. We continue to see the collapse in the EU with various governments continuing to fail. It started with Germany. France, England has already shifted over. You have a bunch of changes within the eastern bloc of the EU, and the war narrative still continues to go. And then, of course, now you have the drone situation happening on the East Coast. The argument being that some of these are sniffer drones for, nuclear materials and that. Who knows? So, with all those things still playing out, it doesn't really matter because at the end of the day, if everything's going to get destroyed, you might as well buy the market rather than sell it because you're not going to be here if it's not. From an NQ standpoint, it continues to be the hold. And see, that's what's keeping everything going. It's in a positive mode. So you get the divergence between the two. Still have cyan under red. That's going to continue to keep things going. So I think as the Nasdaq goes, even with the weakness from the S&P broader, you've got the support necessary, and that's the tech move. And of course, there's going to continue to be new economic reporting, but from a treasury standpoint, where else are you going to put your money? You're not getting a return for it anywhere else. CPI is still running hotter than they're talking about. We don't know when we're going to actually start to see some real numbers coming out of could be until next year before we start to see anything that's like closer to reality. And then how big will the revisions be? It just gets into a mind-numbing endless. I think that it's, from a broader perspective, we're going to see, some interesting things. Real estate, I think that most likely commercial real estate in America is going to be the biggest benefactor of Trump coming in, and that could change things because it's been in a wildly depressed situation for some time. Oil is going to continue to be that unknown, and we have to wait and see how that plays out. So if we ignore the nonsense, we just have to continue to look and see where the money's flowing, and that's always going to continue to drive things. The euro, they're still trying to stabilize this. They're still holding that 105 range in that, but I think as any additional negativity comes out of the EU, that's just going to get harder and harder. And then it's going to put pressure on the S&P simply because a good chunk of earnings do come from that broader range. Of course, the declining interest rate and this theory that inflation is going to be tamed immediately is keeping a lid on gold to some aspect. I think the difference between what you're seeing in the crypto area from that and the continued rise is that this is something that's been held back, and you have more and more outside interest being, excited about the idea of crypto and that it won't be facing such scrutiny and hardship like it did the last 4+ years there. So that's going to be an interesting dynamic that's going to fuel a lot of speculation. And so you're going to get a big amount of run back and forth. And of course, now you get the articles coming about how the Google super chip will be able to break encryption for Bitcoin, and that you can believe that when you see it, as well as when you see Bitcoin suffering from the idea of it. And it's not happened as of yet. But on some of these broader topics about the change of what's going to take place in America as far as the rotation and values. Some of these depressed sectors that you see, which and commercial real estate's been one of them, that will be a poignant one to watch the turnaround. And it's not going to be uniform. It's going to be in areas where there's dynamic change from governments that are willing to bypass a lot of the restrictions that have taken hold, that have really limited the ability of things to get done from a broader perspective. And I think that's the change that, well, let's see, we got a chart that's going to come up here, that's really affected how things go. And I think that you're going to see that kind of fits and spurts in regional areas. And so the smart play is to be mindful of that. Those that are proactive and business development areas are certainly going to see the resurgence quickly because, again, under this tariff construct, companies will, from overseas, will be forced to have U.S. operations. It's fairly straightforward in that. That will, but since the market is, future oriented, even if it does take some time, they're still going to be bidding that up earlier. When we move to an intraday standpoint, you can see how pretty much from the start of the morning, it was just a fade off, and that was pretty clean. NBI white spikes the lead all the way through the decline. It popped up again. We resurfaced to the zero. This becomes an added theme. And this was an interesting one. You had the NBI white spike, but the opposite, magenta leading. And as a result, forced short covering. Then the spike took place again, but this time magenta dipped back below, and that led to your move 50%, went slightly lower before turning back around a little bit earlier. And then we had another spike, but again with strong magenta, and that certainly forced kind of just a sideways move in this particular case. As it got weaker, there really wasn't as much strength from the short side. And every time it came through, we ended up with a little bit of a dip. And again, the 50% became a primary one until we had this last move there, which was a pretty sharp decline. And then the NBI white stayed in the lead all the way through that time at the 0% here in the post market. And you can see we've got a resurgence right now in the EU session. All good, exciting stuff leading up to the holidays. Fantastic. As always, though, anything relevant, I'll put on the Skype chat for you. And we'll continue to have our broader economic discussions of how things will change going forward and what it means and the best places to kind of be thinking about from a strategic standpoint of how to view things. As always, trade well.